What is good, people? Hopefully, you guys can hear me clearly. We are doing a self-diagnosis. No, actually, ChatGPT is going to diagnose me with what problems that I have. This is actually going to be trading edition, just because I want to make it more tailored towards trading. I'm just going to see the flaws, and if that doesn't get so interesting, I'm probably going to switch this to a self-diagnosis in three categories: wealth, health, and relationships. Let's get to it. Hit that like button, subscribe. Let's get to it. We're going to put this to entire screen. We're going to go to this. I already have a prompt, which is ChatGPT. I want to identify my flaws in trading, treat this like a performance and psychological evaluation, ask me structured questions one at a time about my strategy, executions, emotions, discipline, risk management, and journaling, analyze my answers and give me honest feedback on where my behavior, mindset, or process is holding me back. Continue the dialogue until you can summarize my key weaknesses and recommend corrective actions. Let's get to it, boys. This exercise will follow a structured diagnostic methodology similar to a trading performance. Blah, blah, blah. Question one: describe your trading strategy in one concise paragraph. God damn, I'm not trying to make it a whole paragraph, but I'm going to make it a short one. Fuck it. So, describe your trading strategy in one concise paragraph. Include time frames I use. I normally use the 1 minute to trade, 5 minute for a bit of clarity, and the 1 hour to mark out zones. The market conditions you target: trending, ranging. In terms of market conditions, I normally trade ranging and trending market conditions with high volume and greater deviation. Your main entry criteria and confirmations. Your main entry criteria and confirmations. Check main entry criteria and confirmations. So actually, I'm gonna let you guys know this before I type this down. So main entry criteria and confirmations is usually that I wait for price to get to the area, depending on what happens in the situation or what trade setup it is. I sometimes wait for confirmation. On top of that, I also look at timing. So if it's within London session or the start of it or the open. On top of that, I also look at previous market analysis in terms of, let's just say last time price got to this area on the 1 minute, price shot down with a lot of volume. I would also look at that. So and confirmation would be looking at previous price action when it got to this particular area. I would also say sometimes wait in for extra confirmation due to counter trend trading or not in line with timing. But on top of that, that's all. Now, exit criteria. How I define my exit criteria is number one, volume, what else do I do? So I wait for volume because if price is having a lot of volume, I would not put my TP there. What else? What do you call it when you hit a certain area, right? In your place. Hold on. What do you call it when you hit a certain area? Let's just say you have a TP in mind here. Actually, I'm just gonna say never have set TP areas, only mental TP. Your exit criteria and how you define invalidation. How I define invalidation: if price is moving slow to the area or ranging while I'm in the trade, which these two occurrences will lead me to place a TP at the next strong zone. Boom. Your description indicates a trader with awareness of market structure and volume, that there are structural weaknesses in rule definition and execution that likely create inconsistency. The following issues stand out as behavioral and process-driven flaws rather than conceptual gaps. Time frame inconsistencies: you move from 1 hour to 1 minute to 5 minute without a clearly defined hierarchy. This can produce cognitive conflict and reactive behavior because 1 minute 1 noise often overrides the higher time frame thesis. Undefined market regimen triggers: you say you trade both ranging and trending condition, but you not specifically specify objective criteria for confirming regimen. This suggests discretionary classification, which invites emotional bias. Entry logic: too context-based. Looking at previous price action without mechanized criteria means you rely heavily on memory interpretation. There is no repeatable pattern filter. Waiting for extra confirmation, signal sanitation, and fear-based variation rather than rule-based adjustment. Mental take profit: trading with a mental take, then profit taking anxiety. Exit conditions dependent on feel of volume and speed. If price is moving slow, ranging flex exit driven by perception, not quantifying behavior. This increases stress and leads to premature exits or holding too long. Late exit logic: you only set a TP after discomfort emerges, which indicates reactive rather than proactive control. Fight reads an intuitive trading without codified rules. That can work for your discretionary experts, but it will penalize you heavily while still developing emotional discipline. God damn, bro, they shot me back with shots here. How do you determine your risk per trade and stop loss trace placement? Okay. Fixed percentage per trade. Usually always 0.5%. Scale in on bigger, higher probability trades. Whether you size positions before or after choosing stop location. Whether you size positions before or after choosing stop location. Before. First, I choose stop location. Whether stop location are static, dynamic, and moved manually. I'm pretty sure static. Static and don't move. What? Actually, only moved when price hits a certain zone, TP zone. What invalidates your trade idea specifically? Not slow movement, but price structure logic. What invalidates your trade idea specifically? If price breaks through without any resistance, usually wait for a bearish engulfing or bullish engulfing. On the 1 minute, and to add more context to time frames, I only use the 1 hour for zones. Then I hop on the 1 minute to adjust the zones to being more accurate, and only hop on the 5 minute to look at market direction when I zoom out. You demonstrate positive traits, fix 0.5 risk, is disciplined and conservative, stop trading before entry rather than reverse engineering structurally sound, static stop unless structure justifies adjustment, avoids emotional stop manipulation. However, there are notable performance vulnerabilities. Scaling in without a formal trigger, you scale only on high probability trades, but you do not define the objective create that qualify set up for scaling. Strategy bias often leads to adding during heat. Stop adjustment triggered only when price hits your TP region. Trailing after TP zone arrival suggests a reward driven, not structural. Typically, engulfing patterns as late confirmations. Using 1 minute engulfing patterns as a trigger can mean you are reacting, not predicting. Engulfing patterns are lagging signs of aggression and often produce poor entries. It's not framed with model structured time frame interaction verification hierarchy exists, but it is informal rather than rule driven. Zones. Multi-frame system needs deterministic rules such as bias generation time frame, entry time frame, structure validation time frame, liquidity reference time frame. Right now, your hierarchy leaves room for emotion to influence you when you zoom out rather than zooming behind schedule and the strategy. Diagnostic insight. Your system risks inconsistent not because of lack of knowledge, but because your discretionary filters are subjective. You appear capable of identity structure, but your trading behavior relies too heavily on feel and influence rather than mechanical. Let me just quickly check how trades are going. Cool. Whether you write out the plan before clicking. When you enter a trade, do you execute according to a pre-written plan or do you adapt as the trade unfolds? Whether you write out the plan before clicking sell, you usually plan out the trade before entering. Whether you ever enter impulsively or ahead of signal, more so ahead of signal, at some times impulsively. I'll give it that. Whether you change your stop target logic mid-trade. Sometimes I adjust my TP as I'm getting into trades which create a small move, and if it produces a bigger move, I will let it ride with volume until it slows down. Also, I take partials at TP areas. Whether you change your stop target logic mid-trade, a recent example where you deviated from your plan and why. A recent example would be that I traded before London due to the fact it was leading into London, and I already knew price would have a higher chance at taking me out, although the setup presented itself, which I took and learnt my lesson. So your response reveals several psychological and process-driven issues that commonly separate developing traders from consistent profitable ones. Although you do plan trades, the execution phase still contains emotional override pathways. Key behavior dynamics identified: front-running setups, entering ahead of signal reflects anticipatory bias, fear of missing the move. Professional traders treat signal front trading as a process breach from a calculated risk. Dynamic TP adjustments based on emotion. You adjust take profit as getting into trades. This indicates lack of I think, not gonna lie, this self-diagnosis is not really being too well accustomed to actually how I trade. Letting trades run only when comfortable. Not only when comfortable, you dickhead. Premature, yeah, that's fair enough. Premature session participation, that's what I do. That's what I did. Hindsight rationality, I learned my lesson, indicates awareness, but unless you record behavior and consequences, this lesson will not be internalized. Traders often repeat lessons when they are emotionally understood, but not formally. Core issue emerging, you're experiencing a discipline execution mismatch. You intellectually know your rules, yet operation adherence collapses under real-time variables like anticipation, early entries, and emotional rewards. This is commonly among traders who have good chart awareness but lack a mechanical execution structure. Next assessment phase, emotional response. When in a trade, which describes you more accurately? Choose A or B, then elaborate. You feel a strong emotional response during trades, especially early, and watch price closely, adjusting and monitoring often. You feel relatively calm and detached, able to wait for your rules to play out without much emotion. I'd honestly say B. B. Also, at times, it is a mix of fear and doubt. My trade could break through, and greed. Which emotion most often pushes you into a bad trade? Fear of loss. Fear of loss pushes me into trades. Which emotion most often pushes you out of a good trade? Fear of loss pushes me out trade. Usually for both conditions is because volume seems to be slowing down. The response provides a clear insight into your internal trading state. You identify primarily with B. Common detachment describes emotional that contradict full detachment. That one price meets resistance. Damn, I'm lacking in everything. Hold on, let me see. Fear of loss entry. You enter early not because of FOMO alone, but to avoid missing a machine that you mentally equate with lost profit. This is a cognitive bias known as loss aversion. Fear of loss at exit. You exit prematurely when movement slows, indicating risk aversion. Oh, to add more context, I only exit my trades after 30 minutes of it going nowhere, or when price has hit my TP and volume slows down. Okay. Exit simplification. Flat price. Actually, I want to see if you guys can see this. Volume slowdown exit without model. Reward ceiling. When price reaches TP, exit base and slowing. I am a scalper who trades on the 1 minute and holds trades mostly for around an hour or less. Use 1 minute execution precision, reactive flow trading holds up to the one, not true micro scalping, more intraday momentum scalping. Exit on the slowdown momentum dependent. Rather than, this is unusually long for a true scalp, indicates conflict between scalp mindset and swing logic. Key insight: you're operating on a momentum discretionary scalper, but sometimes attempting to hold like a structured trader. These two Bushian identities conflict. You enter like a scalper, you manage like a day trader, you exit based on momentum collapse on structural. This mixed identity causes premature entries, emotional influence disguises volume read. Before proceeding to final diagnosis, you still need to answer the journaling and data track questions. This determines whether your corrective pathway is process-driven, behavioral reconstruction. Do you journal? I do journal my trades. I do not track win rate. Well, say my firm tracks, but multiples, not so much. Only trade London from most of the time from London. In London from Monday to Thursday. I do not track trend versus range versus news performance. Do you review your mistakes weekly in writing? Yes or no? I do not review my mistakes. Remember most of them. Do you tag emotional or behavioral reasons for? I do comment on what I was feeling at that time and the result it came with. What I'm looking for here, guys, I'm not gonna lie, I'm looking for price to low-key do something like this. Probably gonna take a buy here, just because price is not looking too nice. I'll look on the bigger time frame real quick, just to see. Yep. So it's not going out of the picture too much. Probably gonna go something to this. Another thing which I'm looking for here is also how price reacts here. So I do want it to go a bit higher, and then like that. So with this, let's go back to this. What did it say? Based on your responses, you exhibit the profile of a talented, discretionary scalper whose biggest bottleneck is a lack of quantified structure and performance review discipline. You have strong instincts, good awareness of volume and zones, and emotional control that is quiet rather than reactive. However, the absence of objective rule definitions and data tracking creates tactical drift in executions. System category, behavioral weaknesses, system definition, flexible rules, mental TP, undefined rule triggers, execution, discipline, enters early, adjust target mid trade, cognitive bias, loss aversion disguised as caution, exit too early, enter too early, market identify, scalper mentality with swing patience, mixed playbook, unclear hold logic, memory based review, not data based, corrective actions, session filter, London only, already good, entry structure, example, only enter after sweep, reclaim a break or break and retest, not anticipation, volume trigger, define volume using either session timing or moving average of volume bars, define volume using either session timing or a moving average of volume bars, not perception, logic, exit logic, replace mental TP with one of the following, fixed partials plus trail structure, Define your identity. You must lock in one trading identity. Winner system for your profile, intraday momentum, continuous scalpel, continuation scalpel with structured entry and systematic loss. Not swing intraday. Define your identity. Winner system for your profile, intraday momentum, continuation scalper with structured entry and systematic partials. Establish a minimal data process, win rate, average R, determine scalability, setup type performance, session performance, you only trade London, but still log days, emotional mistakes, convert emotion into data. Journaling rule, one script before entry, one after, and one comment on emotion. Introduce mechanical guardrails. No signal, no trade rule. Stop signed off. This protects you from yourself. Core truth. You do not need deeper psychological work. You need system, discipline, and data feedback. Once your intuition is scaffolded by quantified rules and track performance, your growth curve will accelerate sharply. Once your intuition is scaffolded by quantified rules and track, your growth curve will accelerate sharply. Final step, reply with, yes, build me a structure. If you want to ready to implement entry checklist, honestly, guys, just from how price is moving, low-key want price to break through. And you see how these fucking volumes right here, it just looks like the buyers could be coming in now. Yes. Let me see. Primary chart. 1 minute for execution. Bias, 1 hour zones, 5-minute structure sweep and trend clarity. Style, liquidity based intraday momentum scalper. Yep. Trade count, target 1 to 3 trades per session. I like that. And let's pay London. London must be active first. Okay. Trade entry checklist must meet all. Market context in or near swept zone on 1 hour or the redefined zone on M5. Clear session liquidity target. Zones you trade. London open sweep level. Previous day highs or low session highs. Overnight liquidity pockets. Break and retest of key levels with clean displacement. Price action trigger. Select only one to avoid randomness. Valid scalp triggers. Sweep plus reclaim pattern. Break of structure plus retest. Engulfing plus continuation candle volume. Invalid triggers, predicting breakout with no sweep. Entering during chop, expecting a move. Trading when price sits in mid-range without liquidity interaction. Trading when price sits in mid-range Trading when price sits in mid-range without liquidity. Okay, I understand that. Volume confirmation. Use only one rule. Enter only if candle closes with 1.2 times session average volume. Entry only once London expansion candle prints. No guessing volume. You trade proven activity, not expected movement. Stop loss and risk. Beyond stop loss beyond structure plus liquidity zone only after TP hit. Allowed only. Okay, no moving stop loss because you feel movement slowing. Take profit framework. Action. Oh, two. Stop to break even only after TP1. TP2, key liquidity target or volume fade printed candle. Max hold time 45 minutes unless trend expansion confirmed. If price does nothing for 30 minutes, but structure holds, hold. Structure breaks, exit. Not no exit solely to bottom. Okay. Phase two, the impulse rule for pressing buy/sell. Confirm out loud. Bias defined, zone tested, structure confirmed, volume presented, even if one miss, no entry. Okay. Shit, I may just write this down right now. God damn. Spitting balls. I'll take that as well. God damn. You all heard nothing. So, shit, I'm taking notes from ChatGPT now. I do need to actually get over. Anyway, I'm just going to write this down later, but journaling template, fast plus strict, time, pair, direction, setup, type. Oh, I don't mind the session level involved, risk, target, stop placement, reasoning, volume condition at entry, emotion at end. I do not mind this at all. Probably going to start using this specifically. Lesson, nice. Tag your mistakes, only choose from the list. Late entry, early exit due to fear. Okay. Weekly review checklist. Behavior protocol. When you feel urged to enter early, pause and recite. I do not chase candles. I trade structure and volume, not impulses. Okay. Your edge codified. Codify. Your strength is pattern recognition and momentum reading. Oh. Your weakness was lack of structure and mechanical discipline enforcement. This structure turns instinct into scalability. Next step, reply with your choice for daily reinforcement. Checklist. Trade model. Create a journaling spreadsheet template. Train me through lives. D. Shit, guys. Anyway, I had a lot of problems. I'm actually going to end the stream right here. Oh, yo. What's up, Civ? Sorry about that, bro. I apologize, brother. I apologize. I apologize, my friend. I appreciate it, bro. I appreciate it. My bad, Civ. I was so focused. Probably should have looked. But anyway, that's it, guys. Got a couple problems that I got to fix to get better. Definitely did help me just for me a better understanding and all that. Catch you all later.